Welcome back to Income Trading 101. Today is Saturday, February the 13th. We're going to take a look at UNISWAP. UNISWAP is one of the staking pools, an AMM, automated market maker. This is one of the key platforms in DeFi, decentralized finance for crypto. So we're not talking about the centralized markets of the world like Coinbase, but Uniswap is a key significant player in this market in decentralized finance. So they released a token back in September, I think it was, which is why we don't have a lot of data for this. September of 2020 is when they released it, and it has really caught a bid along with Ethereum and other cryptocurrencies. So we've seen a lot of DeFi tokens just really just pop in 2021. And so I just want to take a look at this coin. I can tell you right off the bat, we will not be using, most likely won't be using any sort of Fibonacci retracement. We'll see. We'll take this. We're going to play around with some time frames, do what we do. So let's go ahead. I have a set of tools that I use, whether I'm looking at trading bonds or trading currencies or crypto or equities or whatever. And it's just a handful of technical analysis skills that really cross assets and give me the information I need to make some sort of an assessment or forecast, a little bit of one at least, on the markets. And I use this information to decide how I'm going to allocate my money. So I'm going to get rid of this volume data because I really don't like using it. I'm going to stretch this out a little bit. And as I look at this, we're going to start off like usual. We're going to go ahead and throw in the moving averages. But when I look at this is just, a parabolic move. So I don't feel like a lot of this is going to be valid. However, when we take it down to lower time frames, I think you're going to see, or I would expect, I do this analysis live with you guys. So I would expect that when we take it to lower time frames, we're going to see more volatility as well. We're going to see some of these indicators be of more value. So let's go ahead and flip that to a 60 period. And I think I mentioned on my last crypto video that you can play with these. There's nothing written in stone that you have to use a 10-day or 10 period, a 20 period, and a 60 period time frame for your moving averages. Those are just the ones I like. Sometimes you might find an asset that makes it worthwhile to use a little tighter or a little longer period. It just depends. But I start here just so that I can get a sense of where this market is and how the moving averages trade relative to other assets. So right off the bat, I'm noticing that Uniswap has bounced off of its 20. This red line is the 20 period. In this scenario, it's 20 day. It's bounced off of that a couple of different times, and we haven't seen it touch back in a while. You can see the right now all three moving averages are in line. So the 10-day is higher than the 20, which is higher than the 60, which is of course a key bullish indicator. But I'm looking at how the prices have not, they've come down and touched the 10-day, even gone through the 10-day, but they really have bounced off of the 20 period. Let's take this to a shorter time frame. So let's look at it in a 1 hour standpoint. And this gives us a little bit more data to analyze, and you'll see crossovers and whatnot. Let's see, where do I want to take this back to? Let's look at, keep going, basically 2021. So, this stock has really, or this token has, sorry, I'm, used to saying that, but this token has really taken off in 2021. That's just, you can't beat that, right? You can't beat that all day long. So here is, you've got various points where the 10-day crossed the 20 period. It's not a 10-day, it's a 10 period right now, so a 10-hour. So you would use the 1 hour time frame if you really are looking for maybe trades for the week, maybe trades for even the day. Right now, you have a period where all three moving averages are sort of confused. The 10 and the 20 period seem to be heading lower. The 60 has not adjusted just yet. But this is really, I mean, it'd be very easy to chop yourself up in some of these areas, but there's some others where it seems like the crossover is of value. So again, you just really have to play around with it and see what really works. And 10 and 20, 10, 20, 60 may not be the periods that work for cryptocurrency because they do trade 24/7. So a 10-day in the stock in like the equity markets, that's 2 weeks. It doesn't necessarily have relevance here. So maybe I should be using a 14, a 30, and a 90. But I'm not really sure. You just have to really play around with it and see what works. Let's drop this down to a 15-minute chart. And on the 15-minute, this thing is clearly a lot more bearish than what we saw previously. And I don't know if you just caught that a trade just happened, but this market is open right now. And you see that all three moving averages are in line. So the 60-day is higher than the 20 period, which is higher than the 10 period. So certainly indicating a downward move at the 15-minute level. Let's take another look at the 30-minute level. That's the same. At the 1 hour level, there's confusion. I'd call it confusion when all three lines or all three moving averages are sort of crossing each other and not in line. I prefer to wait for them to be in line so that you don't get chopped up in a trade over one or two bars that can change the significance or change the slope of these lines. And then, of course, at the 1 day level, it's buy all day long. So it just depends on whether you're a buy and hold type. If you are, use the 1 day, maybe even the 1 month, although you don't have as much data yet with this one. And if you are shorter term, you definitely want to use a time frame that's more relevant to your trading style. So let's go ahead and ditch these three indicators. We're going to toss in a MACD, which is very similar. It still gives us some moving averages, but it also throws in this zero line, and it's a way of getting a better sense of what momentum is happening. So we just don't have as much data right now. I mean, this is just not very worthwhile an indicator yet, probably because there just isn't enough data yet. And as I've mentioned in other videos, the MACD I don't find as valuable during we'll call it flat markets, and certainly strongly trending markets like this one. Let's take it to a lower time frame and see if there's anything there. So at the 1 hour level, this is interesting. You might get a little more help. Like this was actually significant, this crossover that happened back here at 4 p.m. Central or 1600 on February 12th. That's significant because even though Uniswap went up a little bit, it did come on down, and you can see that both of the moving averages within the MACD crossed the zero line and now are entering into the oversold category, where really we'd be looking for a crossover or as a signal to buy. You can also see crossover down here on February the 7th, where you would have been looking to buy it, possibly selling the next day. So there's some value to this on a shorter time frame. I think with the 1 day, we just don't have enough data yet to make it that useful. Let's drop it down to the 15-minute. So on the 15-minute, of course, I have to pull this on back a little bit, but you can get a better sense of whether or not this is in line, whether it works for your trading style, and whether you feel like it's giving out or producing a result that is going to be tradable and worthwhile. So let's get rid of our MACD. Normally I would go ahead and toss in some Fibonacci retracement, but let's see if this is even even, sometimes like I would just measure this small little pullback that we're in right now, trying to get a better sense of where to measure as the low. We could definitely identify February the, what would that be, the 7th, but we also right now are back in the 15-minute. I at least want to kick this out to the 1 hour and see, okay, so at the 1 hour standpoint, just for fun, we're going to take a Fibonacci retracement of that last move and see if it is of value to us at all. Let's see. Huh. So thus far on this little pullback, this little downward move, we actually have bounced off of their 38.2% retracement line, and we're approaching it again. So that's interesting. There actually was some value to this Fibonacci retracement, but I had to do it at a shorter time frame than the daily chart. And you can use this at any of these time frames. Definitely manipulate time because you might be able to get a better indication of something if you do so. The other thing that's very interesting, I'm going to get rid of this and just draw a nice little line straight across here. Hopefully I can draw one straight, roughly right there. So when we take this, sorry, escape. All right, so I'm looking at this one. Sorry, people. Let's make sure that that's not happening. Okay. Now we can move it around, play around a little bit with it. So look at this level, right? Roughly $21 and we'll call it $21.56. It's right here. We have back in on February the 3rd, we see that this level played as resistance, and it approached it again a few hours later. Well, no, this is the next day, February the 4th, and then it held a significant both resistance level and never really got to playing support around February the 10th. On February 11th, it really was the breakout moment, and you had one bar all the way, on February 13th, the bar all the way down to that level before pulling back up. That's the beauty of using candlesticks, is that it lets you see that sort of thing visually. And then, this level has played support all of a sudden, played support on February the 11th, and is turning around, and I can't tell. It looks like it's crossed through, but we'll see if it's going to bounce higher or break through and go lower. Like I said, we're already at the 38.2% retracement, and I'm of course using the 1 hour. I'm going to draw that Fibonacci again too, just so we have that information, because I'd like to see where it might go down to next. So let's say it does bounce off of this, $21.33 or so. That's the 38.2% level. Next up, we've got the 50% retracement, which is $20.55. And that's just a retracement of this last partial move that we've seen in February, starting in February the 7th and ending, we'll just call it February the, what would that have been? February the 12th or so, before we saw this little pullback. So maybe we pull back and test this 50% retracement level before going higher, but it's hard not to imagine this thing going higher sometime soon. Let's kick it back. Let's go one more level. So the 15 minute level is always interesting, of course. You just get more data points, right? And we can see, you guys probably know by now, I like putting things into channels just to get a sense of where it's come from and when it kind of broke out. So that would be one channel for sure, connecting these low points, a couple of the high points, but it stayed pretty much within that channel until recently, not too long ago. I mean, just a couple days ago. And now we might be, I mean, we're definitely retracing that move a bit. We'll see what happens. In fact, I could also do this. No. All right, let's see if I can snag this. Yep. Nope. This thing really wants to, it's trying its best to make me. There we go. So let's take this, change the angle. So we could even pull our channel, this parallel channel. We can widen it a little bit more, maybe tighten it a little more, or a number of things we can do to this. It's one of the things I like about TradingView is it really does allow me to manipulate this. So with my channel, I want to create a channel that has as many of the points that are in. I want most of the points, most of the price points to be within my channel, just so I can take a better look, a closer look, and it also shows you, where we are. The bottom of this channel was $21.90, basically $21.91, and we're just a little bit below that. We're about 50 cents below that right now, 40 cents below. We could end up popping right back into this channel and continuing a long-term trend higher. So that's going to be that on this. I mean, it's hard not to say that this thing is going higher. I mean, look at that. Just look how strong this upward move has been. And let's kick it back out. Actually, I'll kick it back to the 1 hour. I'm not going to go back to the daily because the daily just, I don't feel like had enough value. But let's compare this to one of its competitors, which is Sushi. We're going to look at Sushi USD. I'd like to get it on an exchange that I know has decent volume. Let's see. Well, let's try it on Bitfinex. So Sushi came out a lot later, and get this going. You can see it came out here this year, 2021. So about 6 months, 4 or 5 months after UNISWAP, and it's a competitor. Some would argue that the technology is a little better, but it definitely can give us a good indication of which company is outperforming whom. In the last week or so, they've hung pretty tight together, but there might be periods where there's a divergence, and divergence trading is great. It's like parish trading, because this is a type of trade that's used in regular currency trading quite a bit. So you would buy the one that is less valued and sell the one that seems to be overreacting to information. And there have been periods here where you could tell that the spread between them was pretty tight, and then it pulled back together. But it's one thing to look when you're using technical analysis to analyze anything, any kind of asset. It always helps to compare that asset as well with one of its contemporaries, one of the other assets in its peer group, just so that you can see, is this underperforming, overperforming, And if so, by how much? And is there some value to watching them come back in line? For instance, this gap that we saw in late January, that was a gap. That was actually a tradable gap because look at how tightly it's trading now. Sushi swap relative to Uniswap. And so you just have to get as much information as you can, and sometimes just comparing other pricing data can be very valuable. I mean, look how tight they were back in late January, January of all the way through January 24th of 2021. So tight, 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 and then there was a clear divergence between them, and then it pulled back together. But yeah, Sushi Swap has a similar business model. It's an AMM. You can deposit, or you can buy other. You can trade your crypto. This is a decentralized platform. You also have the ability to stake your money with the pool, which allows the company to use your assets to make markets, provide liquidity with their automated market maker. And it also allows you to receive your share of the fees created by the pool. In addition to that, there are these tokens that you can end up, receiving. So, or of course, you can just buy the token outright in the market. So that's it for today's video on Sushi Swap and Uniswap. Thank you guys so much for listening. If you haven't already, feel free to like this video. I really appreciate it. That'll help more people to see it on YouTube. As well, subscribe to my channel so you see when I make new videos. And I'll come back with another cryptocurrency, likely another DeFi video tomorrow. All right, take care and happy trading.